Thank you so much for joining us here on a Friday. I'm Marlon Bowling with you as we watch your ag commodity trade heading down the rest of the week. Well, of course, the markets open up on the futures trade at the bottom of the hour. In the meantime, I do want to take a look here at our market calendar just to get you updated on a couple of things that are coming up. Let's go take a look. And on the market calendar, I just want to remind you, before we get into next week, today happens to be your last trading day on your May contract. So that includes all your grain contracts that trade in May. It also includes lean hogs, the May contract there. They all go off the board today, so keep that in mind. Export inspections come out Monday morning. The NOPA crush report comes out as well. We have the export sales scheduled for next Thursday. The big cold storage report will be coming out May 22nd this month, and on May 25th, that'll be the last trading day for the May contracts on feeder cattle. So that's all coming up ahead. Let's go to the phones and talk with Rich Nelson of Allendale Incorporated in McHenry, Illinois. See what's on the horizon here for the ag trade today. Good to talk with you, Rich. How you doing?
I'm doing fine here today. How about yourself?
Well, not too bad. Happy Friday to you. What do you look for in the grain trade here first on this segment here?
You know, as far as this goes, we're looking at more or less this weather scenario, which hasn't really changed too much here from yesterday. So we're still looking more of a mixed trade for today's discussion. Still a lot of people wondering what type of planning progress is lined up here for us. Certainly not just for Monday's report, but active progress for next week, which will be shown on the following Monday after that as well.
Yeah, the weather conditions seem to be a little more cooperative as we get down the road. However, I was just noting that there's a new storm system coming into the Pacific Northwest. That ought to skirt along the northern plains region by early next week. From what I understand, of course, they have had fairly open weather for a while. Are they ahead of schedule compared to the rest of the Corn Belt right now?
I think for those guys specifically, they certainly are. Certainly, you can argue that the traditional central and southern areas of the Corn Belt are still having some problems here. But I think what you're looking at there certainly is a very valid point here as far as pointing out there are some areas which are not representative of the group as a whole right now.
Okay, so now today I wanted to get your thoughts on what the market is going to be focusing on. We've had all kinds of USDA data thrown our direction here over this past week. We've had our crop report, our supply and demand report. Yesterday, and we had export sales too that were kind of disappointing. Yesterday we had some CONAB estimates that came out of Brazil, and they increased their Brazilian corn and soybean production once again, and that seemed to really weigh on the market. Can they shrug that off now today before the end of the week?
I think for today's discussion, it might add a lingering tone here, certainly for the morning trades. Probably after the first couple hours, though, I think most people will be talking about this issue of planning next week and more or less seeing what type of problem will be lasting, not just into Monday, but certainly beyond that point. As of right now here in the office, we're computing that about 6% of corn acreage is in more or less this underwater or serious moisture excess situation here. And then you're throwing on another 20% on that being a question or a problem area. Historically, there's only a very minor yield impact to late plantings. So even if we plant it a little late, you're not looking at a disaster crop. But certainly this will add a lingering tone of maybe some belief that prices don't need to fall too much here in the next couple weeks here.
And real quickly here, Rich, off the record, I've been talking with several well-known market analysts over the past few days, and no one will go public with it, but off the record, a lot of them say that their contacts are telling them that damage to the wheat crop may actually turn out to be way more significant than what the market has built in so far. How do you feel about that idea?
I certainly actually agree with that. And historically, what USDA did here this past week by cutting the percent harvested, in this case by the equivalent of about 1 million acres, once you compute that out, I think that's how it's going to be stuck with this year. So simply because a lot of that crop in the southern half of that region that was hit was past the stage where it might not recover too well. So I think that's the issue for us right now.
All right, Rich, I'll bring you back here in a moment. We'll talk a little more about the markets. Our guest, Rich Nelson of Allendale Incorporated. Don't go anywhere. We'll be right back. All right, we're talking with Rich Nelson of Allendale Incorporated in McHenry, Illinois. I want to talk now about our livestock trade today as we wrap up the week. Boy, this has been one that has really kept a lot of gyrations in the markets basically for a better part of a week and a half or almost 2 weeks now, Rich. With the cattle market yesterday, it looked for all intents and purposes as we got into the mid-session like we were going to push going limit down on the cattle market. But then before we closed, we lifted well off of those lows and closed, well, I guess we gained back probably at least, if not more than half of what we had lost earlier in the session there. So even though we closed lower on the day, technically, what kind of a signal does that send when it came back like it did?
You know, it certainly does say that this market does have some things that it needs to look at as far as some stability here these next couple of days. As a reminder to everybody, we might have a top in cash feeders, or excuse me, cash cattle. We might have a top in futures, but this cash beef market is still holding firm. In fact, new highs put in for this uptrend just yesterday. A lot of select cuts. One thing we mentioned yesterday was that 50% trimming. Yet another brand new high for that mark as well. So we have the long-term top end, according to many, but certainly as far as the trade discussion, wholesale beef is still one strong market, which does not want to peak here just yet.
Well, yeah, you had a sharp sell-off in the cash market, but the cash is still way outperforming the futures trade here. Is this just a repeat of what we saw like a month or so ago, where the futures eventually had to come up and catch up with the cash again?
I think in this case, you might see something like that here for some select contracts, maybe the June, for instance, probably for the August and beyond, where we do have the supply increase waiting for us, as well as a lower demand environment. You probably won't see that happen for the August, but maybe you can make that argument for the June as we get closer towards the month of delivery here.
Okay, I wanted to run through the livestock summary that we had put together from yesterday's market action, and on that live cattle trade, generally, as I mentioned, it was a wide range of trade, anywhere from a low of 130 for some heifers that were sold in Kansas all the way up to 139 on some steers and heifers that were sold in Colorado yesterday. It was a light to almost a moderate type trade that was reported. The majority of the trade was 137 to 138, I understand, in the plains. And then if you look at the dress basis sales, there again, you had an extreme low of 210 in Nebraska on some heifers, but an extreme high of 221 on some steers in Nebraska. But it looked like the majority of trade was more between 217 and 221 yesterday. So that is how the cash market shook out. The cash hog trade was up a little bit yesterday. It looks like nationally 15 cents higher on a live basis, 22 higher on a carcass basis. And it looks like the pork carcass cutout values were up 73 cents again yesterday. So even though the futures have sold off a little bit here in the lean hogs, Rich, do you think that the market is fairly stable? Because it's had a pretty steep incline here for 2 weeks. I
think you could argue that maybe we've reached a small peak here for the very short term. We're seeing some discussions about perhaps a few packers maybe taking some slaughter hour reductions here over the next few days. That might be an issue which does impact the market, and is a realization that this pork market it's great to have this rally, but we're just not getting the strong retail featuring that we'd like to see to suggest this is a red hot or crazy exciting market. So we love the rally. It's great to see, but we've probably reached some prices which are more appropriate to this certain supply. So we're not going to get too excited from this point on at higher prices.
All right. Well, Rich, thanks for all the advice on the markets and interesting stuff. Good to visit with you again. Rich Nelson of Allendale in McHenry, Illinois, and we'll pause for a little break in the action. And Janet, we'll have the open of the futures coming up at the bottom of the hour, and we'll turn the animals loose.
There we go. Thank you very much, Carlos.